Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be walking through how I like to hedge against higher interest rates. Yesterday I posted a video highlighting the benefits of investing in a number of stocks that I think will do really well in 2022. The key theme there being that they were not very tech heavy, they had strong dividends, and they, for the most part, had pretty strong fundamentals underlying the individual stocks. What I want to talk about here is there are a lot of stocks within the Russell 2000 ETF, especially at the higher end of the market cap range, that do not share some of those similar attributes. So if you look at the portfolio of the stocks that are actually in the portfolio, the first thing I want to talk about is some of the sectors. I'm not super worried about financial services, consumer cyclical, and basic materials, but real estate is something that I would heavily expect to not do well in a rising interest rate environment. The idea behind that is that people are not going to be purchasing as much, and as such, you would expect to see that continue to do poorly in a rising interest rate environment, especially with current valuations having risen so much so over the past 2 years. And that's one of the reasons why real estate stocks did very poorly today to start the new year. Some items that I don't really think are going to be super terrible is in the defensive side. In fact, a lot of these I anticipate would do really well. But then in the more sensitive area where we're talking about these sectors, technology and energy, if you're looking at clean energy, I think will continue to struggle in 2022 under a rising interest rate environment because, again, to fund growth, you need to leverage debt or share offerings, and investors are not as likely to take you up on that if you're struggling to meet those requirements. Now, regardless of whether or not I am correct in any of this, I do think that the approach that I'm looking to leverage is still very, I can't say safe, but it is very low cost for the potential insurance policy that it will provide. I do want to highlight on some of these valuations and growth. You can see that these companies in the Russell ETF are actually losing share or they are not growing, and you can see the book to value growth is also slowing and is net negative, and you can see that the dividend yield is pretty small, price to sales relatively high compared to where it's been, and price to earnings is one of the highest it's ever been. So you can see some of the breakdown in the micro or in the market caps. But I also want to highlight that one of the companies that is still sitting up top here is AMC Entertainment Holdings. This is a company that is continuing to underperform and realistically should be closer to $8 to $10 a share from a fundamental analysis perspective. And I would expect that it's going to continue to decline. And the same could be said for Avis Budget Group, as well as a company like Crocs. So there's a lot here, just again, top holdings that are not looking great. Keep in mind, everything I'm walking through, we have already done and already made a play doing the exact strategy that I'm going to highlight here. You can even see that in the Discord, which is linked in the description below. It's free to join. So what I'm looking at doing is if you go into the options chain, you can actually see kind of the strategy I'm looking at. This is the 5-year chart. So again, keep in mind, it's been about 2 years since the pandemic started. They were trading around 164. And then it dropped pretty dramatically. So what I'm going to be looking at is if you click on this option chain here, it'll pop up. And what I'm actually looking at is if you go all the way out to IWM August 19th, 2022. What I want to highlight is here on the put side, you can look into the 150 to about 155 range. The reason why I like that is because there's a dollar split. So if you want to leg into a spread where I am purchasing the 155 and then selling the 154 for a higher price than I purchased the 155, there's benefits to doing so, chiefly that it is free. But again, small spread, so it's easy to make this free and have some downside protection. However, in the 150 to 155 range, I want to highlight that you can purchase a decent amount of protection right here for something that is going to cost you. Each of these is going to be, again, times 100. So about 220 to 240, about 220 to 240. You can see kind of some of the spreads here. But the thing that I really like about some of the spreads that you have here is that there is a lot of opportunity to hedge a potential decline in values in the future. Now keep in mind, you can see the volume, the open interest, it is not very high, until you go a little bit higher up. So these are not trading very often, so you need to be careful there. But the main thing to highlight here is that offers a significant amount of downward protection. So in 2021, you saw it go all the way up to the indices go up to about 225 and hold and bounce around. And so by buying put options, you have the capability to hedge against any downward volatility you would expect to see coming back down to this 175 range. Again, you can sell and take advantage of the option at the same time that you may be trying to offload some of your stocks or holdings here that are made up in this indices. Traditionally, small caps have not done well in a high interest rate environment, and as such, I think having indices like the Russell 2000 ETF to hedge against those stocks doing poorly and just to have some capabilities to leverage some put options, I think sets you up to have a nice hedge in your portfolio. However, I'm by no means a financial advisor. I'm just some guy on YouTube, but this is something that I'm going to be looking to leverage going into this calendar year. So if you have any questions, let me know in the comment section down below or in the Discord. And if you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.